All right, Taimur Baig is now with us, Managing Director and Chief Economist at DBS Group Research. Taimur, good to have you with us here. Thanks very much. It's been a while. Prashant here. Taimur, hectic and absolutely frenetic pace of news flow and headlines. Much more, I guess, than the first time around. But now we're at close to 2nd of April. What is your own sense, Taimur? From a market perspective, I guess, directionally, is it going to be as strong as what we've heard? Many in the administration say it's going to be harsh. It's going to be more lenient, as we've heard from the president himself last night in an interview. What's your sense?
I cannot accept the lenient part of the promise. I think that's very unlikely, given that Donald Trump fundamentally believes in the power of tariff as a tool to raise revenues, bring manufacturing back to the U.S., as a negotiating tool. So if he thinks of tariff as the most beautiful word in the dictionary, for him to sort of be lenient on that seems sort of counter to his character. I think the stick of tariff will be on our head for the rest of the term of Trump. It's not an April 2 event. It's not what happens 1 month after that. It'll just be back and forth, back and forth. So if the market is sort of, reacting favorably towards some terms that he is sort of using right now, I think it is bound for disappointment.
Although, Taimur, in the case of Canada and Mexico, we've seen, these tariffs, etc., and the announcements being walked back twice over. Many have been watered down. Many have been completely walked back. So, yeah, absolutely, he believes in tariffs. But if the example of these two countries is anything to go by, I mean, there will be room for negotiation.
There'll be room for negotiation, but I think the biggest casualty of the last 9 weeks is the loss of reliability. I cannot really rely on a U.S. promise that something that they're promising today will stay like that. I mean, if 2 months from now, Trump wakes up on the wrong side of the bed and he changes his mind, there is zero check and balance associated with that. That is the biggest problem. So yes, we can look at some data points of the last month or so and say that, it hasn't been that bad for Mexico and Canada so far. The auto lobby in the U.S. seems to be particularly persuasive in making Trump not be that draconian, because that would decimate the U.S. manufacturers more than anybody else. But at the same time, that track record, in my view, is not a marker for reliability, because the back and forth on both directions makes it impossible to say that if something is going to have traction. And by the way, this is not only with respect to tariff. I think it's with respect to foreign policy, national security, global trade and commerce, everything. That how can any partner of the U.S., ally or adversary, rely on the U.S., given that its proclivity toward vacillating is at an all-time high right now?
Okay, I mean, absolutely. And that's exactly what's been captured in the CNBC CFO survey. I was alluding to that earlier as well, Taimur. Just reading off some of the highlights. 90% CFOs say tariffs will cause inflation. And there are a whole host of other worries in terms of how to sort of align your supply chains. So, Taimur, given what you said, now we may get that number on April 2, and then maybe it goes into negotiations. Maybe it's not exactly market disruptive, financial market disruptive, but could it continue to be economy disruptive? So, therefore, if we talk about, say, the Fed itself, I mean, the U.S. economy itself, are you in the camp that believes a recession is possible? What about the responses then from the Fed? And then, it just complicates the situation for other global central banks as well, doesn't it?
Absolutely. I think that the underlying momentum in the U.S. economy is on the softer side, but it is not flashing recessionary signals to me. There is exceptionally high level of uncertainty about policy, about the international environment, about the dollar. But I don't think we're talking about an outright stagflationary scenario where growth goes to negative while inflation goes to 3. I think if growth goes to negative, it'll pull down prices independent of what is happening on the tariff end, because it'll be a massive source of demand destruction. Now, there's some technical plays that we need to consider. The first quarter GDP number for the U.S. is likely to be weak, but that is an artifact of the fact that a lot of imports have been, to use an Indian term, preponed. They have been brought forward, and they have been, they're going to contribute toward a large negative contribution of net exports to GDP for the first quarter. But when you look at retail sales, they're weak, but not exceptionally weak. When you look at payrolls, they're not exactly surprising on the upside anymore, but they're still very robust. When you look at wages, they're still growing in real terms. So I don't think we're on the cusp of a recession-like environment, but that huge uncertainty is a marker for likelihood of postponing investments. That's bad for the medium-term growth outlook. It is also a marker for maybe some large-scale consumption that get postponed. Having said that, if you look at home sales numbers of the last 2 months, it's not that bad. Interest rates have come down a bit. There are certain parts of the U.S., Washington, D.C. would be one example, where there is significant amount of paralysis in the market given the Doge-related firing. But for vast swaths of the U.S. economy, the fact that mortgage rates have come down a bit has had a positive impact on refinancing as well as on outright housing purchase decisions. So I'm not in the recession camp. I do think that Trump has added a great deal of uncertainty to the outlook. I do think there are some inflationary implications near and medium term that we have to deal with, as tariffs, in my view, are inevitable. But that does not put me in the recession camp. That puts me in a slight, mild, soft stagflation camp or something like that.
Okay, all right. Hi, Taimur. Good to hear that, in fact, that recession fears not really come to the fore as of now. So that's good news. Let's keep the US market aside and the US economy. Let's talk about India. I recall the last time we chatted, you were hinting that in the first quarter of this calendar year, we could possibly see the rupee stabilize in that 85.5 to around 86 odd band. Good on you, because there were most of the calls were suggesting 90 odd. And we've seen some kind of consolidation, a pullback. Where do you see the rupee headed? That's point number one. How do you see India's growth pan out from here on? Because there are signs of recovery as per the last sprint. What are you working with for the next year?
Right. So let's take the second question first, and then I'll talk about the rupee. So in terms of the growth outlook for 2025, we're sort of cautiously optimistic. There is some degree of caution, especially with respect to informal and rural sector demand. But we do think that some degree of revival in animal spirits in the equity market, some additional news on capital formation, some good news coming from the fiscal side with respect to revenue collection point toward no further downside to the growth outlook. But we are cognizant of lingering weakness in the informal and rural part of the economy. So 6.5-ish is where we are going to peg our growth forecast for 2025 and beyond. As far as the rupee is concerned, there is an interesting phenomenon going on right now. The countries that are very keen on dealing with the U.S., accepting whatever demand that they can anticipate coming from the U.S., are likely to see an appreciation of this currency vis-a-vis the U.S. dollar, because the U.S. also would demand that U.S. dollar weakens against their currency. If you have read some of the outlines of the rather dense Mar-a-Lago related discussions, that seems to be one of those policy objectives of the U.S. that try to revive competitiveness of the U.S. economy by weakening the dollar, and that means that their partner countries would have to appreciate their currency. So if the market sort of accepts that the Indian authorities are also amenable to allowing the rupee to appreciate, will not tolerate depreciation. So I think the risk reward toward the rupee remains on the appreciation side, especially since India seems so keen on dealing with Trump and already taking preemptive measures to ensure that some of the really bad stuff from the trade war do not come to the shores of India.
Taimur, just 30 seconds, 30-second response to this. They've said they want the dollar lower for competitiveness, and the broad dollar has been falling. Do you think that continues to be the case? You said tariffs will be with us for the full 4 years. But do you think broader dollar will also be a feature for the full 4 years?
I don't think so, because I think that there are some major internal inconsistencies in the Trump model, and that will come to fore. So you cannot have, the tariff and weak dollar simultaneously. Part of the negotiation is to force dollar down, but I don't think strong dollar and strong tariff are the things that should go together. I think that's the way it should go together, not the other way around. So if there is major risk-off in the world around recessionary concerns, among major disruption to global trade and commerce, and we have a lot of policy uncertainty lingering from the U.S., I think the dollar smile remains, independent of the very recent phenomenon. I don't think Trump will get everything he wants because there are some major flaws in his economic model.
All right, stronger dollar, higher tariffs, stronger dollar, and that's the inconsistency that you've been talking about. We'll see. Thank you very much for joining us, Taimur. Good conversation and good to get that perspective from you. Appreciate it.